Hello traders, this is David from Wave Trader. So this is a second video I'm making to buttress what I was saying on the Australian dollar Canadian pair. I'm on the New Zealand Canadian pair right now. So this is the monthly chart, and since the Australian dollar and the New Zealand that's these pairs, the Nzdcad and the AUD card, they are moving almost exactly the same. So this is basically like a repeat of what happened in the other one. So I'm not going to go into an extensive analysis, but I'm just going to show you how I usually look at my trades when I see possible setups, so that you too can begin to copy what I do. Because the good thing about learning to trade is just copy your mentor. Okay, just copy what your mentor is doing. If your mentor is doing successfully and doing well in his trading, just copy what he's doing, and you will see that your trading skills will improve dramatically in a very short period of time. So before you decide on any trade, please analyze that currency pair from the monthly. Okay, so looking at the Nzdcad from the monthly now, you can see that we have a prolonged downtrend here, which started from November 2018. Okay, it gave us a negative divergence scenario here, which pushed price to a wave top situation here, and then the market went down strongly. Okay, but now we have what looks like a spinning top slash inverted hammer here. So if you look at what's been going on here, whenever you see a reversal candlestick, you can see that the market pushes up strongly, almost 100% of the move, not quite, about 79 maybe. So this is about 79%, between 62 to 79% of the previous move. So it makes sense that if we were to take a retracement from, let's just take it from here. Okay, you can see that our 62% retracement is here, and because of what the market has been doing in previous rallies, it makes sense that this move might possibly push up in the next year or so, all the way to the 79% of this downward move. So that's what we're looking at from the monthly perspective, but that's not your concern. Okay, because you are intraday and swing traders, only investors can think of looking at this long term like this. Right, so now let's go to the weekly. So you can see everything that has been going on here, and when we come to the weekly, we can see more definition. Yeah, so we can see that the MACD is beginning to thin out and looks like it's coming together, just like it came together here and then began to cross over. Okay, so if there's nothing much to see here, at least we have a very valid hammer bar here. Okay, we had an inverted here, we had a sort of quasi hammer here, we had a bulky looking spinning top, and then we had this. Okay, now in the candlestick world, people know the names, they call them all sorts of fanciful Japanese names like gravestone doji, shooting star. To me, that's not really necessary. It's good to have the knowledge if you have the time, but all you need to know is that once you see a reversal candlestick, it connotes that the market is possibly beginning to reverse. So let's go to the daily chart. Now, when you come to the daily chart, as an intraday trader, a day trader, or a swing trader, you can begin to analyze the daily chart to make informed decisions about the direction you want to trade for the day. So in this instance, by coming to the daily chart, I can see that right off the bat, you can see we have a very valid wave bottom situation. Okay, and to this point, we had about 3 back-to-back cases of positive divergence. Okay, we had one here which pushed the market up to this point, and then the market followed the downward trend down. Then we had another positive divergence, okay, of price to the MACD, and that pushed the market up a little bit. Because the trend was strongly bearish, the buyers could not really gain strength, and of course the sellers pushed it down again. Then we had this third instance, and by then the strength of the sellers was beginning to wane. I can see that the buyers pushed the market strongly up to this point, to where there was to a previous level of resistance. Okay, so and you can see a lot of reversal candles occurring there. Okay, so this means over the course of about a week or so, the market was here. Okay, so this would have created a channel. If we were to go to the 4-hour chart and 1-hour chart, you see that there will be a channel here, and the market now pushed down for one final move. But then let me make it bigger and let me use the cross. So you can see here that now the market pushed down, but it did not have enough strength to go to the previous level. So this makes it a 1, 2, 3 bottom, as I like to call it, a wave bottom situation. Okay, so that means that the buying power of the selling power of the sellers is almost spent, and now the buyers are getting ready to jump in for their own ride. So we can see a spinning top here on the daily chart, and that adds up to the wave bottom to give us confidence that this move is just about to kick in. So by taking our profit target values from, I'm not sure which of these two, let's see, I'm not sure which of these two is the lowest. I'm just going to go with the green. Okay, by taking my profit target from there to this point here, so of course we have profit targets going up here, but what I wanted to show you was, you can see how the market pushed beyond the 71% and then began to retrace up. Okay, so from the daily you can make a lot of analysis and decide conclusively where you want to trade for the day. So let's go to the 4-hour chart and see. So this is the channel I told you about, or consolidation. Okay, and I remember that when this was happening, I actually placed a trade, I believe somewhere here, to go to the upside, because I thought that this was a fourth wave and the market had finished what it was doing there, but then the market came down and took me out. So when I saw that it hadn't finished what it was doing, I decided to leave it alone. I didn't trade this, okay, but I knew from the monthly that there was a massive positive divergence going on. So I knew that this move wasn't going to be prolonged, even though it tested my patience to wait. Okay, I waited all the way from the 11th, and you can see all this going on, and of course it created another positive divergence situation here. All right, so finally it gave us this spinning what do you call this, railway tracks. All right, beautiful railway tracks, textbook definition of railway tracks. Okay, and then the market began to push up. So I saw this, and because I had placed a trade on the Audi card, I knew that this was going to follow as well. So I went to the 1-hour chart, and you can see the positive divergence here that I was talking about. And a positive divergence is usually a precursor to a wave bottom. All right, so I saw this. This is one instance. This is a slight one. This is second one, positive divergence, and the third one. Okay, so when I saw it and then the MACD had crossed, so what I did was I waited for this move, and I placed, I think it was a buy limit here, and you can see that this move came down, took me in, and right now I'm in the trade. Okay, so I placed another order for 10 lots here, because I know that the market has momentum, and it's going to gain strength soon enough and push. Okay, so that is my take on the New Zealand card. Now I've already analyzed the Australian dollar Canadian currency pair, so I don't need to do the same thing here because they are both moving exactly alike, and I want you to watch that video if you haven't. But the main thing I want you to understand is, if you analyze these trades from the monthly perspective, now of course, ideally, you will be watching your trades on the 4-hour or the 1-hour, maybe even the 15-minute, but don't make your trading assumptions from these smaller time frames. Go to the monthly time frame and analyze first. So if I open my laptop and this is what I see, it doesn't matter how sexy the chart looks like, okay? You have to go to, if you can't go to the monthly, at least start from the weekly, so that your bias will be set by the time you come to the daily time frame. So because from the daily time frame, you can see that we have this beautiful wave bottom situation here. So if you were to come to the 1 hour chart and you see something like this happening, you won't be scared and say, oh, the market is about to go down. If the market is going to go down for any reason, then it will just be a retracement of this upward move. And the best way to look at it is to probably go to the 15-minute, okay, and then decide when you want to start scaling your trades. So when you have a dip here and then the market resumes the upward move, you can put in another order again. And that is why I'm confident enough to put in my 10 lot orders, because this makes a valid 1, 2, 3 wave. Okay, with the I mean, this is the first, second, and then the third starting here. Okay, so if we go to the 4 hour chart, you can see it now that this is 1, 2, 3. I mean, this is 1. I'm talking about the points, sorry. So this is point 1, point 2, and point 3. But what that means that this is wave 1, 2, and then the third is just gaining strength. Okay, now I've placed my profit target here, but I expect the market to be giving a little bit of resistance here, and that's why I placed my profit target here. But once the market pushes past this zone, I fully expect to continue this trade, because you can see that if this is wave 1 on the daily and this is wave 2, it makes sense, and the wave 3 is never going to be the shortest wave. So that means I'm even cheating myself by putting my profit targets here. Okay, ideally my profit target should be at least here. Okay, but I'll be happy to take my profits here and then wait for a good opportunity to enter again and then push strongly upward, of which I did on the Australian dollar Canadian currency pair. I think my profit target there was on the fifth one, which will take a very long time. Okay, so that's actually a position trade. Right now, this can be construed as a swing trade. Okay, and if you are a day trader, you don't have to trade like this. Once you've gotten your pip count that you are happy with, take your profit and run. If it's 20 pips, that's okay. From here, this order I placed was 5 lots, right? From that point to this place, that is 40 pips, and that's good. That's very good, okay? Because that's about $2,000 right there with 5 lots. Okay, now I've placed another order here for 10 lots. Now, if this moves in my favor by 10 pips, that will be $1,000. Okay, so that means that from here to where my profit target is 85. Now you know what I'm talking about when I tell you that if you know what you are doing, you can make a lot of money. So I hope that this video was instructional for you. And as always, I wish you happy trading and a good day as well. Thank you very much.